Is the rally in gold dead? Is this it? We had a massive run up in gold prices and people were going out literally buying Costco gold bars. Is that it? Did we just top out? And is there more downside for gold? I've seen a lot of people talking about this, and I'm going to share both my technical and fundamental outlook when it comes to gold going into the end of the year. A lot of my subscribers have been asking about gold and wondering if, was that the topping point for gold this year? 4,300, 4,400 didn't quite get tapped, but we were pretty close. We're also going to talk about the US dollar in today's video. Is it bullish now or is it topping? And this is a really important discussion because, again, it will help us to answer that first question as well as our third question of the day, which is currencies. Do we have a new leader in the arena here? We'll talk about all of that in today's video. As we get started, if you could hit the thumbs up button for me and let's jump right in. And ladies and gentlemen, it is here. Our Black Friday sale, which is the biggest discount that we run all year long, is now available. It's currently 40% off to get a copy of the Edge Finder. If you're a regular viewer of my channel, then you know that the Edge Finder is my go-to source for economic data, as well as, of course, looking at market sentiment, institutional activity, and so much more. I just wanted to make that publicly available as we start out today's video. If you are interested in getting a copy of the Edge Finder at the lowest price of the year, you can currently get 40% off. Here is how. Down below in the description, if you use the promo code YTVIP at checkout, that will apply this 40% off Black Friday discount to you. And if you are interested and have questions about the tool, you can also speak directly to a member of our support staff using the link in the description as well. So feel free, message in. We can give you some details about the sale if you need some. But again, do not miss your chance. It's the lowest discount, or the lowest price, I should say, the biggest discount that we do each year. And it is store-wide. So I should also mention that if you're also interested in getting access to our trade alerts, you can do so for 40% off for a limited time. Down below in the description, all the details are there. So to answer this first question, is the rally in gold over? I think we have to take a look at a couple prongs of analysis, if you will. We'll take a look at price action. And of course, the question remains, is this, kind of a topping signal? We'll also take a look at fundamental analysis, because what was a very strong driver to gold prices moving up this year has admittedly dwindled a little bit, which I want to talk about in today's video. And finally, we'll take a look at sentiment, because sentiment analysis is critical to finding good risk to reward trades, and I'll break it all down in this video. So let's go ahead and jump right in, starting with the monthly chart. So if I'm looking at gold spot price, of course, versus the US dollar specifically, what has led the gold rally to be so strong this year? Well, look no further than the dollar index's weakness. We've seen the Federal Reserve poised for rate cuts. We've seen uncertainties due to U.S. trade dynamics with its allies and, rivals, China, etc. But the question is the dollar index, that's really the crux of this conversation, is the dollar index going to continue lower, which would drive gold higher, or is the dollar index going to reverse course and start moving higher, which could put a little bit of a pushback on this gold rally? Well, here's my thoughts. Let's take a look at the technical analysis for gold. First and foremost, the monthly chart here is still constructively, I think we should look at this innocent till proven guilty. What I mean by that is that if we take a look at this monthly chart, we've had long candles or long wicked candles here on the monthly chart previously that ultimately did resolve to the upside with the drive higher that we saw just last month. So back in September, we saw the massive breakout of this consolidation zone that we were stuck in for multiple months for gold prices. However, the question now becomes, are we due for a little bit of a continued consolidation? Gold has been doing this where it jumps up, it consolidates, it jumps up, it consolidates, it jumps up, it consolidates. Is that the full jump before we consolidate? That's really the question. And I think that to say here that the gold rally is dead and it's going to certainly reverse, I think is very, very much presumptuous, to say the least. Because again, we've seen this story multiple times, and each time bears get really loud. They say, hey, we're topping out, and then the market rips higher. So I think that trying to say this is the top of gold is kind of, in my opinion, a big assumption to make. So my thought process on gold is that, are we due for a consolidation? Sure. We may have some sideways price action ahead of us, but I don't think that's the same as saying we have directly, we're going to start trending down. Just taking a look, again, higher time frame stuff here, just a line of best fit. And actually, there is a cool indicator for this on TradingView. Let's see if I can find it. Regression trend. So if I just take a look, like going back to 2023, which is really the kickoff to this huge rally, we can still see that gold, just a regression line here, is still very much in the realm of kind of this long-term secular uptrend in the precious metals. Are we stretched? Yes. I think this does have room to pull back. And I've mentioned this before. I think if we're just going off of our line of best fit here, a move back to like 3,800 is not bearish. Again, maybe in the short run, if you're day trading or short-term scalping, maybe you have more of a bearish view. But on the weekly chart, we take it down a notch here. We're still, again, constructively overall, bulls are in charge. Now we're pulling back on the lower time frames, which we'll get to next. But price action wise, I think we have a little bit more room to still pull back and to not freak out. Now, again, if you're leveraged, if you're chasing, if you're a Costco gold bullion buyer, I don't know if you guys saw that, but people were literally buying gold bars at Costco at $4,400 an ounce, which is just, I feel bad for them. But at the same time, that's how you learn stuff in markets, is you get burned, right? And unfortunately, a lot of people who went out and chased $4,400 gold at Costco bars could be in for a little bit of a test of their patience, which clearly, if you're chasing all-time highs, patience may not be, your middle name per se. But again, I think a healthy correction in gold, I've seen this around social media from a lot of technicians. I agree in the sense that I think a healthy pullback is that. It is a healthy pullback. There is a difference, however, when we start looking at this and ask the question, do we think there's going to be a pullback strongly enough that we actually get short? That's the real question. Do you short this move, assuming that we have further downside to come? Well, I think that's a little bit of a personal strategic question, but my answer would be no. We don't fight uptrends on this channel. I talk heavily about momentum. And I don't really think that shorting into, what is a healthy pullback, you're playing musical chairs, right? I think that if you're trying to short gold and still think that the higher time frame is bullish like I do, yes, you may have some downside. And if you're a day trader, a scalper, maybe you play that move. But for me personally, the trade that I think has much higher probability and I'm much more comfortable with is looking for longer term dip buying opportunities between the 3,800, 3,700, and even a pushback down to 3,400, in my opinion, is still constructively long term in the realm of possibility for the bulls. So do we have more room to pull back in the short run? I would say yes. You are talking about coming off a very stretched move on gold prices, literally a one-directional move with no more than 2 days worth of pullback in the last several months. Now we're finally seeing this chart break momentum a little bit, and let's take a look at a moving average basis. What we can see is the 20-period moving average has been recaptured by the bears. The 50-day, however, has not yet been tested, and I think we are likely to test that. Again, not willing to short, but I think the market is doing a healthy correction right now. The 618% retracement could line up with the 100-day moving average. And this is maybe where I think the longer term bulls would start to step back in, would be if you saw a 618 retracement, the 100 and 200-day moving average, 3,600, 3,700, 3,800. These areas look like healthy pullback zones that longer term bulls, in my opinion, could be making their move at. So short term, yes, I think we have more downside to come. Not willing to short it, but long term, I'd be willing to look for buys around the 618 to 3,600, 3,700 level. Now, let's talk about shorter term trading, because I know that a lot of my audience, does do the longer term stuff, but a lot of them are also shorter term traders. You might have a reason in your own strategy to short gold in the short run, but I'll tell you why I don't have any reason to take any trades from a short term trading perspective at this time. If I go over to the overall, let's go to our market scanner page, and I'm going to select for gold. If I look at gold, we actually get, and I'm shocked to see this, a bearish reading within the Edge Finder. This is incredibly rare. Technicals straight up look bearish. And we got to talk about seasonality in the month of November. So momentum on the 4-hour and daily chart has shifted lower. It's showing bearishness. At the same time, economic growth metrics look strong for the dollar. GDP, ISM manufacturing, manufacturing PMI numbers, services PMIs look okay because they were a little weak, right, which is good for gold. And retail sales numbers are deemed bearish for gold as well. They were stronger than expected out of the US. Jobs market has been weak. That's bullish for gold. Inflation data, however, not particularly bullish for gold. Edgefinder getting a -6 score on gold is very rare for a few reasons. Number one, it's been in a dominant uptrend for the last few years. And if we take a look at gold prices and we say, okay, we may have lost this short-term momentum and maybe we're now actually in a bit of a down move. Here's my caution. Do I think there is a short-term bearish trade? There might be. To be honest, there might be. Part of the reason for that is this chart that I keep hovering over, which is, of course, our FedWatch tool. FedWatch tool suggests now just a 63% chance of a rate cut in December. This is down from the previous, a week ago, 2 weeks ago. This was higher. So this has come down a little bit. And so a little bit of a hawkish sounding Powell has caused further dollar strength. And in my view, if you've been watching the channel, you know I've been a little bit on the bullish side of the dollar. I just closed out this week of a long position on the UUP ETF, which is essentially a DXY proxy. It's a dollar index bullish ETF. So I closed out of that this week, but I still think you may have room for gold prices to pull back. And I want to reiterate, long term, I'm a bull on gold pretty much always. But I really would prefer to wait for lower prices and preferably not such a bearish reading from Edgefinder. So I think that, yes, I think gold has more downside to come. We've lost the 20-day moving average. However, the 50, 100, and 200 are still bullish. So this is a very big shift from where I've been most of the year. Precious metals have been the lead reason, one of the lead reasons that this year I've had a really strong performing year. I'll show you my overall year-to-date performance. Well, that's all time. Let's take a look at year-to-date. Year-to-date, I'm up 31.55%, largely due to a lot of the precious metals trades that I've taken this year. If you've watched my channel, you know I was long gold, I was long silver, and have cooled off on those trades. Again, I think as traders, we have to know when it's time to step back and reevaluate. And so if gold is in a multi-month consolidation or pullback phase, we may have more room for this gold move to finally top out. So again, it's rare because I prefer to be on the bullish side of gold, but when my system tells me bearish, I've got to respect it. And so that means no longs and very much going to watch constructively how price action plays out. For shorts, I would love to see lower lows, lower highs. If we start seeing that pattern really take place, and maybe if we move past and below the 100 and 200-day moving average, there actually may be some short-term shorting ideas that I may get into in gold. Again, very rare, but we have a very risk-on type of market. Momentum seems to have shifted bearish. And if we take a look at that seasonality reading, right? Seasonality is also bearish here. Let me just take a look at that because I'm really curious about gold's full year seasonality in retrospect to what we just got done discussing. So I'm going to switch over here now to GOLD. Let's look up gold. And there it is, right? So we're going into the month of November, which is historically speaking, last 10 years, it's not been a good one for gold. So again, maybe just a trade, but maybe short-term bearishness is path of least resistance for me when it comes to gold as we continue to pull off this top. Again, literally Costco gold buyers and people in the streets buying gold. I showed some pictures on my YouTube channel that was taking place. Literally people were out in the streets buying physical gold at bullion shops in mass. Like there was lines out the door. That is straight up topping type stuff. So again, I'm very cautious when it comes to shorting gold because I really like it for the long term, but I think that the signals may be there for at least a top, perhaps in 2025. Maybe 2026, we take those out and we keep going, but maybe there's a little bit more room to pull back here as the dollar seems strong. By the way, again, I mentioned this earlier, but don't miss the chance to pick up a copy of the Edgefinder right now. We are doing our Black Friday sale. It is 40% off. It's a huge discount. And one thing you should know about Edgefinder is that it is a one-time payment. We do that intentionally. We have other, we know that there's a lot of services out there, products and things like that that charge monthly for you. And if you stretch that out over time, if you see yourself trading over the long term, those things can be incredibly expensive. But what we do is we charge a one-time fee, and that allows us to reinvest proceeds sooner to continuously build and improve Edgefinder into what it is. We've taken, customers from all over the world and built these tools. Like we just dropped an SMA heat map. This just helps us to scan charts that are moving the strongest or weakest. You can see gold here a little bit mixed as we've discussed that, but you can also look at like pound dollar, getting just straight up bearish momentum here to the downside. And we recently added this AI news feature as well. So you can see here, this will show you latest updates on gold generated by AI, summarizing your news for you. We have, of course, the top setups algorithm, which is a really popular feature within Edgefinder. And I can't believe, man, it's going to be hard to get used to seeing a gold bearish reading. It's so rare on Edgefinder. So, and then Treasury is also getting a bearish reading, Bitcoin getting bullish, S&P 500. Again, Edgefinder has remained very risk on oriented. So perhaps I shouldn't be too surprised to see gold getting a little bit of a pessimistic reading. But again, like I said, don't miss out on that discount. YTVIP, that is the promo code to use at checkout. That will get you a huge discount off the product. And again, it's a one-time payment for lifetime access. So let's talk about the dollar, because I mentioned that was part two to this conversation, and I just want to talk a little bit about where we are. So I mentioned I took a profit on my UUP trade. It was a profit of about $3,000. It was not a huge profit on the account that I'm trading, but it's still, I'll take it, right? So I took the profits on UUP. Part of the reason for that is that I am bullish on the dollar, but there seems to be some other currencies that are showing some signs of strength. And I'll talk about that in just a second. But dollar index, I think that if you're looking at this from a technical perspective, we have to zoom out and just kind of understand what's happened this year. We had a huge bearish trend in the dollar this year. It was actually the worst year-to-date performance up to that point in the dollar's history. And then we went sideways. We've gone sideways, we've consolidated. And now it seems like trade deals are taking place and some of the worst feared worries have not materialized. And so now it looks like dollar index may actually be poised for some upside. Now, I think that if you're bullish on the dollar, you probably want to watch this level here. The 100 round number is a critical area for both bulls and bears. Bears want to see that thing hold. They want to see this thing not go above 100, because if you break 100, you very well could go to 101.5. That's that next major area of resistance that we have marked up on the chart. If you're a bull, you want to see that happen. You want to see a break and strong closure above this prior level of resistance. So watch for that. If you're a dollar bull, watch for this breakout. Because again, if the Fed slows its rate cutting process, once again, we know how historically that can impact the dollar. The dollar can go on a multi-month run to the upside if the Fed is going to slow its rate cutting process. Again, there is nothing to say that the dollar index could not make a bigger push and recapture some of its lost gains, considering what got us here: trade war concerns. What's recently been happening? Trade war concerns being shrugged off. So we could see a move back to 103. We could see a move back to 102, 105. These things are not impossible. And anyone who thinks a move in the market is impossible is doomed to blow up. And what I mean by that is things can always happen. I think the dollar index may experience some further upside in the short run, but I could be dead wrong. On Monday, the dollar index could move lower. The difference between, someone who is profitable and somebody who is unprofitable people assume that something can or cannot happen. Where profitable traders, one of the first pillars to profitable trading is recognizing that anything can happen, and we never know with certainty what the market's going to do next. So I think odds are, in the short run, I think we could have some more upside in the dollar and maybe go test this 100 level. I'm already positioned in dollar Swiss franc. Although I closed my UUP position, I still have a longer term I'm in this thing as of the last few weeks, but longer term level of support seems to be basing out here. I would love to see dollar Swiss break through resistance, but I am in profit on this position, and I'd like to see if we can go higher here. So we'll watch for it. But dollar Swiss, one of the ones that are on my watch list. I mentioned also that in this video we would discuss some possible winners in terms of the currency world. So let's let's do that. Let's actually just take a look here. I'm going to add everything in. I'm going to add major currency pairs here. And you can see against the dollar, we have a lot of neutrality. But if we add in some minor currency pairs, we can start to see if there's anything. Wow, we literally have nothing strong. That's crazy. Okay, so everything is neutral in currency land. This is also incredibly rare. Some weird things are going on recently. But anyways, if we can also take a look at this. Our next way of looking at economic strength specifically would be to go down to our economic heat maps and select for economic surprise meter. This tool is pretty cool because what it does is it scans all of the major currencies and their economic data relative to expectations. A higher score just means that versus expectations, the data has been coming in strong. And what we see here is we have the euro, the Japanese yen, the Australian dollar, and the Canadian dollar all coming in with strong scores. Some of our weaker currencies would be the New Zealand dollar, the Swiss franc, and the US dollar. Pound, let's call it in the middle. I mean, technically, none of our things except for the Swiss franc are weak, but part of the reason I like dollar Swiss franc is because the Swiss franc looks really weak. But I think that you may be having a bit of a rotation in some of the currencies here right now, because a lot of the currencies that have been really weak, like for example, CAD, are showing some signs of life here recently. So I think that what you may have starting to take place is you may have, some of the stories for some of the counter currencies to the dollar coming back into play here. So if I look at, for example, euro dollar here, euro dollar's actually been getting hit pretty hard, but I actually see kind of limited downside in the short run for euro dollar. Maybe if we come down and test this area of support, you could get some reaction there. We may be in a longer phase of consolidation for things like euro US dollar. But I don't have a really strong bias on this one. If we take a look at pound dollar is longer term, sitting at a support level. Interestingly, we actually closed kind of bullish on Friday. I wouldn't say very bullish because this thing is, kind of been showing signs of momentum completely fading to the downside. But currencies are weird right now. I've been saying this on my channel. I haven't been trading a lot of currencies because I just don't have a lot of strong bias. I don't have a really clear winner, clear loser scenario on our economic surprise meter. But I'll continue to watch for this to see if new leadership does start to take place. Right now, some of the interesting ones are like, for example, the Australian dollar. If we just take a look at this one, you can see this one's kind of consolidating, but showing some signs of strength here recently in terms of economic data. And if we go look at our AU economic heat map, which by the way, you can do this for all of your major currencies, you can see that the Australian dollar is getting some strong impact score, specifically higher inflation than expected, could keep the RBA more on the hawkish side of things. GDP growth came in better than expected. So I think you could get some relative strength out of the Australian dollar versus perhaps like the Swiss franc. So if I take a look at this, Aussie Swiss franc has been consolidating, but if you were to get like a breakout here, this would be what I believe to be a strong economic outperformer versus a weak underperformer. And so I'm looking for that kind of play in currency land. But again, not a lot of currency setups for me here recently. Really more interested in watching gold now and the indices, as gold has kind of showed some actual bias on Edgefinder. Believe it or not, we still have some downside in the eyes of the Edgefinder in the short run. So we'll see if that does persist. Again, nothing is correct all the time. No system is perfect. But if you do see the value in having economic data in front of you on a regular basis, it may be worth checking out that Edgefinder discount that I mentioned earlier on. Happy Black Friday. Take advantage, get a copy for the lowest price of the year, and we will see you guys in the next video. Thanks for watching.